Good day, guys. Welcome to Forex Walker. Welcome to episode 80. This is a recap episode where we talk about the currency pairs that we have aligned based on macroeconomics and monetary policy divergence. Here is AUD and ZD with a negative carry of negative 3.32 points. That means when you hold long this position, you will be sharing your profits with the broker. So I talked about this on the previous episode. To really understand and enjoy my videos, you just need to go to the first episode and move on with each episode for you to understand exactly what is happening in macroeconomics and the FOMCs. So this was a monetary policy divergence that I talked about, and I talked about how I was looking to exit the AUD CAD, any currency pair that has a CAD in it, because the CAD is exiting the recession and they're holding interest rates. So it is not a good idea to hold. Yes, the trade will proceed, but it is not a good idea to, it's unnecessary for you to hold longs on a currency that is actually doing well. It's wrong to hold shorts on a currency like CAD that is actually looking like it's doing well, especially because it's a commodity currency, and all commodity currencies are supposed to be moving with capital. When capital is moving towards the southern hemisphere, the CAD is supposed to be doing well, and when capital moves to the northern hemisphere, and the CAD is also supposed to be doing well. So let's move into the JPY. The two currencies that I am holding short at the moment is the JPY and the CHF. I explained the reason why I'm holding them short on the previous episodes. So here we are talking about the Japanese currency, and this is the inflation rate. Where we are having a slowdown in inflation. The reason why the Japanese yen is hiking interest rates when the global economy is cutting interest rates. First of all, it's a wrong thing to hike interest rates in a global recession. It will not be good for your currency. That's why we have a globalization where all currencies move into a recession together and all currencies move into a booming economy together. So at the moment, we're having an inflationary slowdown here in the Japan inflation, where they're talking about the Japan inflation rate edged down to 2.9% in November from October's high. So these are some of the reasons why they might be hiking interest rates because they're trying to chase inflation, which is not a good idea. And the reason why I believe they should be, uh, instead of hiking, they should be cutting interest rates to help with the GDP, is because the GDP in this economy is not doing well. We were up there at 2.3, 2.1, 0.3, 2.1, and we dropped back into the negatives. And yet, these people are still hiking interest rates, which is totally unnecessary for them to hike interest rates. I understand that most economies they hike interest rates based on debt. Let's say the economy was in debt for a long time, especially when the in the previous economic boom, uh, the, the economy was in the interest rates were in the negatives. As you can see here, it's negative 0.1% of interest rates. That was Feb 29, 2024. So the economy was in the negatives. No economy wants to be here, and because of that, they might be in debt, and they might be looking to charge a few taxes to the residents for them to recover from the previous economic collapse. That might be the reason why they are hiking interest rates in Japan, but it is not a good idea because the GDP is collapsing, and you can see exactly what is happening. The GDP is playing around into the negatives, telling you as an investor that this currency is worth selling. That's how I analyze macroeconomics. And here it says Japan's economy shrank 2.3%, analyzed in October's steeper initial estimate of a 1.8% drop. So here they're talking about the declines, 0.5% decline, and all of this is bad news for the currency. And that means the currency is good for selling. I've been selling the yen for some time now since they hit uh, the previous recession, and they did have a boom, but after that boom they hit a peak and they started collapsing again. And these are the reasons why you should be selling the JPY. So if you don't want to use the CHF, you can replace it with the JPY for the sells. And for the longs, you have the AUD. So you can have AUD, JPY, AUD, NZD, AUD, CHF. Those are the currencies that you are supposed to use for replacing currencies that are doing well, like the CAD. You can actually go long on the CAD for now instead of going short on the CAD. Uh, as I said, this trade will proceed higher, but it is unnecessary for me to hold longs on a currency that is doing well economically, especially because they held interest rates. This is the CHF, the AUD CHF, and I'm having mouse problems. Previously, we did what we did because the hold was from here, and we had to hold the previous shoulder, and the currency looks like it is not fighting back. It is actually moving in the actual direction that we were looking for. That is the AUD CHF, AUD NZD, and AUD JPY. Those are the currencies that you need to sell. This is the JPY, the AUD JPY. You can substitute uh, on the right where you see the AUD. You can substitute any currency that is bullish and have the trio currencies, the AUD, NZD, and CHF. CHF, JPY, and NZD for shorts, and replace and change the long currencies for others. This currency will break above the next high. This is something that we've been holding for a long time. We talked about shorts on the previous shoulder here. Shorts where we want to the 50% feed, and we return to the previous shoulder, and we want short on the NZD USD, and the shorts are continuing to uh, collapse as time goes. We're expecting the market to break below this low as time goes on into 2026. Any currency pair that has the USD in it is traded based on instinct. Uh, instinct. I'm against going long on the US dollar based on the macroeconomic reports, but because of the The interest rate cut that was introduced. A lot of people are saying it's a hawkish interest rate cut, but because I look into core inflation and any macroeconomic report that has the core as a prefix, uh, uh, core standing for the exclusion of energy and foods and beverages. So those are, I'm having mouse problems. My mouse is not really moving. So I will be expecting this currency pair to proceed into going long. As you can see, it went into the previous shoulder here, and you can see that it looks to us that it is actually going long. So let's look into the next currency. I had a USD CAD before, and for those who are looking forward to holding the USD CAD long, this looks a little bit beautiful, but I have an issue with the CAD because it is fighting back and it does not want to give us the profits the easy way. It is actually trying to pay us the hard way, and that's the reason why I'm a little bit reticent with uh, holding shorts on the CAD or selling the CAD and going long on the USD. I still have an issue with going long on the USD, but either way, I will be holding these currencies. The famous Euro USD is showing us that it is reacting to the previous shoulders, the first previous shoulder above here and the second previous shoulder. It is showing us that it is reacting to the previous shoulder, and we're expecting to hold our shorts on the Euro USD short. We'll see what happens to this trade in the coming time. The euro is in debt, so there's really nothing that is holding it up there. But then they don't want us to see what is exactly happening. But I'm going short on the euro at the moment. The Euro AUD is one of the old trades that we held from here. We expected it to go all the way up there, but it didn't. So it touched the 23.6 from the 50% fib, and it proceeds to collapse lower into the weekly time frame trend line over here, and everything looks beautiful. I had to liquidate the Hungarian front trades. This is the Euro Hungarian front, and it looks like it is rejecting well from the 50% fib, and it proceeds to collapse all the way down there. I saw this erratic reversal over here, and I decided to liquidate from up there, and that's exactly what I did. So I'm out of the Euro Hungarian fund, but either way it will proceed to collapse all the way down there. Those who wish to hold the pound USD short, that means you will be buying the USD and selling the pound. Those who are looking forward to taking those trades, they can do so as we went above the 23.6 from the 50% feed. And but the actual hold was all the way from up here because the first 50% feed was here, and we held from over there all the way down there. As you can see, rejected from the previous shoulder. This is just the second pullback, and I believe that the market is actually rejecting nicely from here, and the shorts are to be priced in on the pound USD. But then it is a negative carry, and I don't wish to hold a negative carry in any of my trades. So this is just a short move that will happen in the future, and those who want to hold it, they can actually hold it all the way down here. Thank you guys. This was the recap, and I'll see you on the next episode. Goodbye.